program is the active center.
You've ever stop and think about our economy as, well, as a kind of blueprint? A detailed plan that somehow decides everything from the price of your morning coffee to the cost of that new phone you've been eyeing? Well, today we're going to explore the architecture of one of the most famous blueprints out there, the free market.
It's a question we've all probably wondered about. Who actually decides the price of a car? Or a gallon of milk? Is it some CEO in a boardroom? A government committee? The real answer is, it's not any one person. It's a powerful, almost invisible system, and we're about to dig into its rules.
So, to really understand this economic blueprint, we've got to start with the absolute basics. What exactly is a free market?
Okay, so at its very core, a free market is a system that's driven by this natural dance between supply, how much of something is out there, and demand, how much people actually want it. This whole idea was really championed by Adam Smith, who's pretty much known as the father of modern economics. The most important part of this definition, though, minimal government intervention. The system is designed to pretty much run itself.
Now, like any good blueprint, the free market needs a rock-solid foundation to stand on, and it's built on 5 absolutely crucial pillars that hold the entire structure up. Let's break them down one by one.
First up, you've got private ownership of resources. This just means individuals, not the government, own stuff and have the right to sell it. But owning things isn't much use without the second pillar, the presence of financial markets. This is the whole infrastructure, the banks and stock markets that lets all the buying and selling actually happen. Then, of course, everyone needs the freedom of participation, the ability to jump into the market whenever they want. And the engine that drives this whole thing, that's self-interest. Sellers want to make a profit and buyers want to get the best value. Simple as that. Finally, you have competitive limits, which act as a check on power, stopping any one company from becoming too dominant and helping keep prices fair for everyone.
All right, so we've got our foundation, but for this blueprint to work in its purest, most perfect form, it has to assume a very specific set of ideal conditions. You could think of it like needing perfect weather to build a house without any problems.
So the system kind of assumes a few things are true. First, that all of us are rational actors, always making logical choices to get the most for our money. It also assumes a limited government that basically just provides security and enforces contracts, but otherwise stays out of the way. And it assumes we all have perfect information, that we know everything about prices and quality before we buy. And that there's market fluidity, with tons of buyers and sellers, so the market can naturally find its equilibrium, its perfect balance point. Now, here's the catch. These are ideals. The real world, well, it rarely, if ever, matches up perfectly.
So every blueprint, no matter how well designed, has its strong points and its potential weak spots. Let's put this one through a little stress test, shall we? See where it really shines and, where it might show a few cracks.
On the upside, it's an incredibly efficient system. That drive for profit, it sparks constant innovation and economic growth. As consumers, we get a huge amount of choice, and business owners get to have autonomy. But there's a downside. It can lead to what are called natural monopolies, where it just makes sense for one company, like your local power company, to dominate the market. And since profit is the main goal, the system often fails to provide essential but unprofitable things, what we call public goods. Think about public parks or a national defense system. There's no direct profit in them, so the free market tends to underprovide them. This really gets at the core tension of the free market. Its amazing power also comes with some built-in limitations.
Okay, so we've looked at the theory, right? The blueprint on paper. But what happens when we go from the drawing board to the real world? How is this economic model actually built and used by countries today?
The honest truth is that no country on Earth has a 100% pure free market. It's more of a spectrum, but some countries definitely lean heavily on its principles. You can look at the United States, which is famous for its innovation and price freedom, or Singapore, which is known for its super low taxes and a hands-off approach. Even smaller economies like Macedonia have made a point of limiting government control to attract more business.
Let's bring this right down to an everyday level. Just think about the stores in your own neighborhood. A retail shop is a perfect little micro-example of the free market in action. The owners get to decide what they're going to sell, where they'll set up their store, and how much to charge for everything, all based on what they think you, the customer, are going to want to buy.
Or think a little bigger, like a manufacturer, say a car company. That company decides on its own to invest millions in research and development for a new electric vehicle. They decide who their target customer is. There's no government mandate telling them what to invent or who they have to sell it to. It's a perfect example of how that self-interested drive for profit can lead directly to innovation and more choices for all of us.
So we come full circle, right back to our blueprint.
We've seen its foundations, its ideal operating conditions, and how it performs under pressure. We've also seen that when it comes to the real world, the final building is always a little different from the original plan. And that leaves us with a big question to think about. If the perfect free market is the blueprint, what does the reality we've actually constructed tell us about the strengths, and maybe the weaknesses, of that original design?